Okay, what is fractional reserve banking? Anybody know what that is?
Banks that lend out more money than they actually have in reserves. You know,
Okay.
They only have to have a certain fraction.
Sure. I think that's close. That's the answer I'm looking for, basically right there. I'm going to point out the mechanism. You know, what's your name, sir?
Bob Owens.
Bob. Bob did a good job at answering it. We're going to talk a little bit about the mechanism that's used. Say I go down to the bank, I put $1,000 in. Now the bank has historically a 10% reserve ratio. The Federal Reserve can raise that or lower it at will. But over time, it's been historically right around 10%. That means that I can take 900 of that, or the bank can take 900 of the 1,000 that I put in and loan it to customer B. Now, customer B's note counts just like it was another fresh $900. And you take 0.9 times that 900, 810, and so forth through the formula until the bank can actually loan out $10,000 on every $1,000 that's actually deposited with it. This is where inflation comes from. Now, I got into a little discussion on a radio program one time with a former member of the Federal Reserve Board. I believe it was Russ Cleary, but he's dead now, so I can't verify that. But he said, well, it's called the multiple use of money. Well, how come the bank gets to use my money 10 times and I only get to use it once? I earned it. I did more to make that money than the bank did. That's insane. You know, that's what's leading to the booms and the busts and making my dollar worth less. Now, another thing I'd like to point out is among the investment banks, the reserve ratios are sometimes as low as 2.5 cents on the dollar. So they get 40 to 1 leverage. And think about this. This is one of my favorite examples. Hank Paulson, last year he was CEO of Goldman Sachs, collected over $100 million in salary. He also negotiated stock options of $500 million. He pulled $600 million out of that company. And what did Goldman do? They created the money to drive the price of stock up, to pay the commissions to the brokers, to pay the executive salaries, and to drive us into an untenable bubble, you know, a bubble that eventually burst. Okay, so one thing I didn't mention earlier, you know, quite often the government has these T-bill auctions, and everybody knows the Chinese owns, was it $1 or $2 trillion, it almost is immaterial anymore, of our federal debt, and the Arabs and a whole bunch of other people own a whole chunk of it. And for the first time in our history, we have more foreign-owned debt than American-owned federal debt. Kind of a scary position to be in. When I was a kid, they said, oh, don't worry about it, we owe it to ourselves. Well, what happens when the T-bills don't sell that afternoon? When the government can't sell all their debt? The Federal Reserve steps in and buys it. And what do they buy it with? Money that they pulled right out of thin air. They have no reserves. They have no dollars. They have no reserve requirements. They can legally counterfeit your money at will. And again, what does that do to the values of the money you have in your hip pocket?
Creates inflation.
Pardon?
Creates inflation. Because what they're doing
creates price inflation. If we use the word inflation with regard to increase in prices, I prefer it called price inflation because there's negative effects of inflation, and we're going to talk about that right now. Effects of inflation, higher prices, that's the obvious one. And again, it doesn't always happen. If you got an economy that's in a bust cycle like right now, it doesn't matter how many Federal Reserve notes are pumped in, a lot of us aren't going to borrow and go out and spend to the point where it's going to drive prices up. Or you have a situation like the 1920s where industrial productivity grew so fast that most consumer goods actually went down in price, but it still misdirected the economy. And false signals. That's what I want to talk about now. Well, how does it misdirect the economy? I'm a businessman. I think I can build another spec house before the crash comes. I go to the bank, I borrow a pile of money, and That drives the price of land up, it drives the price of building materials up, and now I got a $200,000 house in a $130,000 market. It creates a bubble. It creates a house of cards that eventually might crash. Another example I like to use is we loan money to farmers. It drives the price of equipment up, drives the price of land up. But supply and demand being what it is, if we create more crops into a surplus market, is that farmer necessarily going to have an increase in income despite his increased expenditures? Not necessarily. So this is where the booms and the busts come from. They send false signals to consumers, false signals to producers, and you get overproduction in some areas of the economies, particularly those that are capital intensive, where borrowing is a big part of the transaction. And I think it was Henry Hazlitt who said this. I just remember the quote, and I haven't been able to verify where I got it from, but this puts it in a nutshell. Counterfeit money creates counterfeit businesses which can only be sustained by further debasing the currency. And that's what we've been doing for years, is debasing the currency. Okay, I think we covered the rest of what's on that page. Ad lib, sorry about that, I got a little ahead of myself. Okay. In 2001, I think we had a major missed opportunity. We just got done with the Clinton administration, and we opened the books in January of 2001, and George Bush had just got to be president, and it was his damn fault that during the last year of the Clinton administration, nobody made a profit. Well, that's an exaggeration, of course, but there were a lot of businesses that showed that they didn't make a profit during those wonderful Clinton years. And why was that? First of all, some of the, let me back up. There's a number of reasons why the Clinton years weren't as good as they're remembered. And the first is that we had false prophets. The people like Tyco, World Crossing, Enron, that were cooking their books in order to keep the price of stock up. They paid taxes on those earnings that they didn't make, thinking that in the long run they could make them up. Again, a house of cards. The more money that the Fed threw at the system, the longer they could disguise the problem. Tax collections higher, okay, and then based on an accrual method of accounting, there were no Clinton surpluses. The best he ever did was a $500 billion deficit if we figure the books on accrual. Every obligation that they made, they offset that against the income, but some of the obligations were into the future and weren't counted on a cash basis like the government likes to do. And, as us old farts, as baby boomers get older and start to retire, a lot of those unfunded liabilities are going to start to come into play in a big, big way. We also had the Twin Towers coming down, but I maintain that even that, it would have been better to take the hit at the time. But we had Mr. Greenspan who said, we will create the liquidity with which to float the markets. In other words, we're going to counterfeit the money so that you don't know how bad off we really are. And now he claims not to understand, where this problem came from, this economic downturn came from, when he and the Federal Reserve were primarily responsible for the mess that we're in. And it's not like he's an ignorant person. Back in the 50s, he used to subscribe to hard money. And he wrote a wonderful essay on how the gold standard keeps the federal government in discipline. They can only spend what they have. They limit, they do a much better job of spending their money, and they don't have the opportunity to buy votes with their kids' and grandkids' money, like we have been doing for a number of generations now. But sooner or later, some Peter in the future is going to have very few nickels. We're going to destroy the economy. There's folks who have been saying this for a long, long time, and the chickens are coming home to roost. I guess that last statement pretty much summarizes what I just said. The longer we put it off, the worse the ultimate adjustment is going to have to be. And there's people out there who think we can postpone this indefinitely. That's foolishness, and it's economic suicide. I think it borders on treasonous if it's not outright treason.